If you have clicked on this video, then you clearly want to know if it is time to sell in Perth. Has it grown too much? Are investors starting to sell their assets in Perth? What is going to happen with the Perth property market in the next 12 months? So I thought I would give my 2 cents about it. And to be quite frank and quite honest, I believe Perth has grown incredible, and it's grown that just too much. Prices have grown over 60%, even closer to 70 to 100% over the last 3 years, and people who have invested in 2022 have literally doubled their money, and you want to enter that market. For me personally, I would not be investing into areas where people have literally doubled or tripled their money in the last 4 to 5 years over this extraordinary period of growth. Just to put this in perspective, I've put this location to Greater Perth, and we can see, and I've set the budget to $800,000 because most people don't have more than $800,000 to invest in property, and it'd be very rare, and you'd be in a different ball game. But say you had $800,000 to invest into Perth, there's about 85 suburbs you can choose from. If I set the price range of 3 years less than 60%, we can see that there are only 22 suburbs to actually invest into that's grown less than 60%. And if I've put less than 50%, there's only 10 suburbs to choose from. And this isn't even after factoring all the other metrics that I would put in. You can see some of these suburbs have high vacancy rates, some of these have too high rented to owner occupier ratios, so they would automatically remove all these suburbs. And there are not many suburbs in Perth to actually go invest into at this point in time because it's just grown too much. And to show you a couple of examples, we have suburbs like Armadale, which have literally grown 100% over the past 3 years, which is literally doubling your money and more. And now you can see it's on average over the past 10 years at 9%, or a well performed above average at 9% over the past 10 years, which is extraordinary growth. And when we start to look at the more metrics, we can see the renter to owner occupier ratio is very high at 40% now, and affordability is above 50 years. Affordability for above 50 years in Perth, it's quite ridiculous. That's the levels you sort of see in Sydney where people can't actually afford property. And people in Perth are on relatively high incomes, especially the ones who are on mining jobs. And we can see a slight increase in days on market with demand slightly tapering off, but stock is still very low levels. But the interesting metric that you will look at and that you will see across a lot of these Perth suburbs is the vacancy rates. The vacancy rates have skyrocketed with the number of investors buying into these markets. And they're still buying into these markets because they have FOMO, or fear of missing out. This is just one example. Let's have a look at this one, Rockingham, which is a very popular location back in 2022 to invest into. And we can also see it has grown significantly, close to 60%. Renter to owner occupier is a little better. Socioeconomic scores a little better as well. But affordability is still very high now at above 45 years. And we can see vacancy rate at 1.48, which is perfectly fine. We can see a little bit increases in 2024, early 2024, but a slight decrease, which is good. Rockingham is one of those suburbs where the data is still not bad and the stock on market is still pretty low, as well as the days on market and the demand is still very high. This is an okay one. But let's have a look at Gosnells, because I know Gosnells is a crazy suburb. When we look at Gosnells, again, ridiculous growth, over 90%, and affordability extremely high, and vacancy rates as well getting higher with it increasing over the past year, and stock on market sort of leveling out with demand still very, very high. But the thing you need to understand is that these locations in Perth, like Gosnells, like Armadale, are low socio-economic areas, right? These areas have grown massively over the past 3 years. They are not very popular areas of Perth to actually live into and reside into, but they have increased so much in value that people have doubled their money. So it would not make sense to actually go into and invest into these areas, into these pockets of Perth. In fact, there are some members who are already considering selling their investment property in Perth. The reason being because they've made their money. It doesn't make sense to hold on to these properties in these low socio-economic areas where either prices could either stagnate for the next 5 to 7 years, or they could also fall down in price, which is not what we want. We don't want to be losing money. We want to be making money, right? To put this into perspective, Gosnells, a low socio-economic area in Perth, around 30 k's away, it can get you a $650,000 home, or from $650,000, a 4x2x2 in Gosnells. That same money can get you into the Melbourne market in Roxburgh Park. Now, Roxburgh Park isn't an overly popular area in Melbourne either. However, when we're talking about capital city to capital city comparison, economic diversity, infrastructure, GDP, Melbourne takes a hit there. And the other point I want to make is that Melbourne has been a sleeping giant now. It hasn't grown for the past 3 to 4 years, or it's just been steadily flatlining because of all the issues that it's had. It's gone on a huge run over the past 3 years, while Melbourne has stayed stagnant. You can invest that same money that you would have invested in Perth, but invest in Melbourne, and you can get possibly another growth cycle into Melbourne. And that's a decision that you have to make. Yes, holding costs are not the same in Melbourne, but they're no longer the same in Armadale or Gosnells or Perth. Yields have significantly compressed. You can see over the past year, minus 10%, over the past 3 years, minus 13%. And the reason is that's not because rents aren't rising, because you can see rents are still rising, but because property values have risen so much in Perth, it has compressed the yield down significantly. And so holding in Perth is also getting more and more difficult for our properties in low socioeconomic areas of Perth. So that is a condition that you need to factor in as well. So while there are some people who are FOMOing out, who want to get into Perth property market because it's so hot, you'll make instant equity very quickly, you have to also accept that you've missed out on so much growth that on some investors' minds, on some families' minds, they've been like, wait, I've made so much money already. Why would I hold on to this property anymore? It doesn't make sense. Perth is overvalued almost. When you compare Perth to Melbourne and their GDPs, and the fact that you can spend the same money but get into a larger capital city with more infrastructure, more economic diversity, would not make sense that you'd invest in Melbourne? Would it not make sense that Melbourne is slightly undervalued? So those are conversations that you need to be having about whether or not you should be investing into Perth, and whether or not, if you have a property in Perth, is it time to sell? And just before I go any further into the video, if you have not already, make sure you are subscribed to my private community. We are building wealth together. The community members are always helping each other out. We have over 130 members in the community helping each other out, discussing different locations, access to many resources. There are reviews online. You can check it out. It's an absolute no-brainer. You need to just try it for 30 days and I guarantee you will enjoy the product and the service. An absolute no-brainer if you're buying property in 2025, and avoid the silly mistake. Why would you pay 15 grand or 10 grand for a course or a buyer's agent when you can pay $35 a month and get the exact same level of quality information? So make sure you are joined into the private community. And like always, make sure you are also joined in the free newsletter where we go through a different location every single week. Absolute no-brainer. It's completely free. Why wouldn't you subscribe? Go join. Don't be silly. Now, the other consideration I want to make is that Perth has gone through a massive property cycle already over the past 3 to 5 years. And so if we do a little bit of very simple modeling, and say we bought a Perth property for $650,000, and then we assumed over the next 5 years, realistically it's not going to grow for the next 5 years, but say over the next year, next 2 years, it grows 10 to 15%. So over 5 years, that averages to around 3% every single year. Your total equity position could be around $100,000 worth of growth. Forget about the cash flow, but about $100,000 worth of growth. If we took that same money, invested into Melbourne, which hasn't gone through a massive growth cycle for the past 3 years, and we can achieve 30% growth over the next 5 years, which is very achievable, you could be sitting on an equity of around $200,000. And you really have to ask yourself, is that property you buy in a low socioeconomic area of Armadale or Gosnells for $650,000 could be worth $750,000 in 5 years, or is a property you buy in Melbourne for $650,000 in one of the similar areas, can it be worth $850,000 or more? And the reality is that when you look at these numbers and you compare region to region and where Perth is in its growth cycle and where Melbourne is in its growth cycle, it really makes you question and wonder whether or not you should be investing into Perth or Melbourne at this point in time. My liking is towards Melbourne because I like to buy counter-cyclically. Now, of course, there is no guarantee that Melbourne will be able to achieve this growth, but however, the numbers, the growth rate, and its position in the cycle really suggest otherwise. And that's a very simple modeling. You still have to buy in the right pockets of Melbourne to make sure you actually achieve that growth level. But the real question that everyone wants to know is, what should you be doing? Now, if you have a property in Perth already, I probably wouldn't be holding onto that property for much longer. And if you have it in a low socioeconomic area, I would really consider whether or not you should be selling that property, because after all this growth, it doesn't make sense to hold onto the bag when you can reinvest that money somewhere else. There is a case and point example for the people who really need that quick equity in the next 12 months. Can you consider Perth as a location to invest into? And the short answer is yes. There is still very low stock. There is still very high demand, both from owner occupiers and investors into pockets of Melbourne. Is your risk very high about investing into these areas? Yes. You need to be very careful. How much more can these locations grow? When will that stop? When will the demand start rising? Because you won't see it happen overnight, but you will see that shift over the next 3 to 6 months as we watch the data. 2025 might be the last year of growth we see in Perth. For those looking for really quick equity, you're really betting on the market will stay hot. But even then, ask yourself, how much more can it grow by? Can it grow by 10% or 20% more? And is that worth for you to take that risk to jump into the Perth market? And I really hope this video has given you food for thought about whether you should be investing into Perth or any other location for that matter. It doesn't have to be Melbourne. It could be Queensland, could be Melbourne, could be New South Wales. Does it make sense to invest into a market that has grown double and triple over the past 3 years, and people are even now considering to sell? So I hope this video has helped you, and if you're wondering where exactly you should be investing next and who you should be talking to and what network you should be connecting to, make sure you jump into the private community. And if you're wondering exactly where to invest in 2025, check this video out.